For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. It's a non-farm payrolls week. Today we're going to be going over daily process. We've been reviewing the higher time frames. We're going to address a couple of questions today, and we're going to go over some best trade candidates that happened on Free Cash Wednesday, the midpoint range of the week. The whole idea is to be refining your process so that each day you have high probability instruments on your watch list or instruments that you're trading with a rock solid game plan for 90-10 trade setups. It's always about hunting the 90-10 edge and in recognizing when there's garbage charts or no setups, and have the discipline and the wherewithal to stay away and not engage in any impulsive, irrational, and emotional behavior. But also understanding what type of setup do I have on the day. Is it a 5-star ACB, or is it going to be a nail and bail? And this week being non-farm payrolls, we have on the indexes narrowing ranges. We had a couple of opportunities for London session traders this week and New York Open. Excellent opportunities on other currency pairs. But most importantly, understanding that on a non-farm payrolls week with instruments that are going to be impacted by high impact U.S. major red news, President Trump speaking as well, to recognize locking in money and walking away, or if it's a hold till close trade setup opportunity. Now, I just want to repeat to everybody, hopefully the additional module from the playbook and the ACB Masterclass will be up later today or early tomorrow. So thank you for your patience. Also, several traders have emailed and asked me regarding gold, about putting something together for gold. And I'm in the process of actually refining that down right now. A masterclass, so to speak, on gold specifically can be used with the other metals, but gold specifically and some of the 5-star opportunities, and looking mainly at 1 or 2 high probability opportunities each week on those instruments. But this week we've had excellent chances in all 3 sessions for several instruments, and we're going to go over some of the candidates that fit that criteria and how they came onto the watch list. The biggest thing to focus on really is building your watch list with 2 or 3 high probability instruments, or a couple of high probability instruments and a best case thesis for one of the instruments that you're trading. For example, US indexes. We know that they offer opportunities potentially at the New York Open or in that third hour, depending on if it's front side of the week or back side of the week. And the watch list is really the priority, because that's what brings up 1 or 2 high probability candidates onto your list each day, and then whether or not that sets up into the session that you're trading. Now, one of the instruments that I like to look for 3 session setups on regularly is gold. And today we had an excellent opportunity just heading into the New York Open in a very well-engineered template. Now, we've had all-time highs put in place. We're at the midpoint range of the week, day 1, day 2, day 3. And that market, although it was inside, was still a large range day. The question on gold, when we have 200 or 300 pip box or $20 or $30 range, is whether or not it's actually a well-engineered template on the day. Now, looking at the daily chart on gold, we see a market that's been in a very, very strong uptrend, continuing to make higher highs and higher lows each month. Now, we broke out again at the end of March, and we've continued to trade higher into the new month. We're still on the front side of this move, which again reinforces the understanding of, in a reversal setup on a smaller time frame, it's nail and bail. Still making higher highs, but we now have 1 close and breakout, 2 closes and breakout, a higher high down closing day. So again, reinforcing to traders, not just calling a down closing day a first red day, but maybe potentially now a third higher close. Not predicting, not forecasting, but paying attention. If we get a third higher close, we may have a market that could offer a beginning of a backside. We might get an initial nail and bail for a first red day that continues to break down and maybe giving a 5-star scalable parabolic reversal. No idea. I'm not going to try and get into something and catch the high and hope that it goes down. But if we do have a short selling setup, as we're going to go through from today's session, it's a nail and bail. Nail and bail at any point where the market may have already put in a low of session or low of day level until we're on the backside of this move. Now we go to our 15-minute chart. We're on Wednesday, remember, and the market yesterday broke out strongly in Asia on Monday, Tuesday, and Wednesday. And we can see this market, although it gave a nail and bail trade, is continuing to push back higher as we head into that third hour, the new 4-hour rotation. Now you'll also recognize that at this stage, it's an inside day. We're inside of Tuesday's range. It's the midpoint range of the week, but we're also inside of the Monday, Tuesday opening range and initial balance. Tuesday put in a peak formation low before dumping down and going parabolic, but we remain to be an inside day at this stage. But most importantly, the thing to recognize is that we have a range now of 250 pips or $25, whatever you want to work in. And that's still large enough, as I've mentioned, if I'm going to take a trade on one of the metals, I want at least a 100 pip range or a $10 box, because that gives me a range big enough to target some asymmetrical risk reward. Typically on a gold chart, if we go down to our smaller time frame, I'm looking for the max stop loss to be 20 to 25 pips. So as we head into our New York window, the thesis can be that the high has been put in place in the Asian window. You notice we've gone 50 pips above the 100 pip box. We've pushed above again in the London session before breaking down, coiling, and going parabolic down through the low of the London window. So again, protecting that current high of day level. So above that 31.29 area is higher time frame selling on this particular day. Now, always when we head into our session, how does price behave when we head into our window? There are only two types of templates that I am hunting when I'm looking for a setup. Regardless of the instrument or the session that I'm trading, it will always be either a dump, coil, and pump, or a pump, coil, and dump setup opportunity. Now, the next most important thing, obviously, is timing. Now, you've heard me talk about first hour, second hour, third hour. In this particular case, the market has dumped down and pumped up. So we're doing nothing. We're just sitting on our hands because we're inside. We need to be at one of the extremes or have evidence that the high or low of the day or session has been locked in. We haven't violated one of the previous day's levels, the high of day or low of day level. So now we have one burst higher. Our second hour starts heading into the 9 a.m. hour, and we burst higher again before trading sideways and engulfing right at 9:30 New York time for an entry with a $1 box in place and a very fast parabolic stop hunt back to the low of the session. Now here's the thing. As I've talked about in the most recent videos, reinforcing simplicity. We're just taking a trade. That's all we're doing. It's nail and bail, as we just witnessed on the higher time frame. It's non-farm payrolls week. We're inside of the larger, higher time frame range. So we're either pumping and dumping for a nail and bail, or we're dumping and pumping. Now, traders that have gone long in this new 4-hour rotation have also had an opportunity. Whether or not this continues higher, no idea, but it's a non-farm payrolls week. I'm taking the money on my trade. Now, simplicity is the name of the game, whether you're going long or short. There are only 3 things for you to do. Put an entry in, your stop loss, and the take profit level, regardless if you're going short or long. There is nothing else. You can only protect how much you're going to lose and lock in how much you can potentially make on a trade. That's it. Everything else is just gobbledygook, entry, stop loss, take profit, and then let the trade play out. So predefining your risk, and as I said, on a momentum move that should move quickly, 20 pips is plenty of risk on gold. There's no major red news after 9:30, and so it's entry, stop loss, take profits, lock in the money, and walk away. So you can see that it's a simple process. Sticking to the process is what's important. Entry, stop loss, take profit, keeping it simple. Now, for traders who potentially may have traded that at the new 4-hour rotation, 10 a.m., the third hour, an opportunity for 50 cents back up into traders that were short at the New York Open. Now, that same model applies that we just looked at. Entry, stop loss, and a take profit level. The box has gotten smaller. We're now down to 50 cents. We're on day 3, the midpoint range of the week. And again, nail and bail conditions were in a narrower range. The initial trade opportunity offered a $10 box. Next, we can look at a couple of the indexes, just big picture thesis. Remember, non-farm payrolls week, Monday opening range, if we go back and look at our daily chart. So recognizing big picture, we had a first red day collapse back in February, March. So we had a market that gave first red day right at the end of January. That market continued to break down in February, broke through the low of month right at the beginning of March. And if we just project January across, obviously traded through the lows of January before putting in a first green day on week 2 and then continuing back up into where the market broke down at the beginning of March. Now here's the thing, we're inside. We have a first green day potentially at the low of March. We have a market that broke down on Monday, the beginning of a new week, taking out the low of the previous week and sitting on top of that week 2. Now we're inside. We had a first red day at the end of the month, closing out week 4 up high. So we still have higher time frames selling. We had a gap on the Monday that has been filled, and we're still trading underneath of that. So traders, we talked about this in the previous video about not every up closing day or down closing day is a first red day or first green day, but we've definitely locked in the extremes and we're inside. And what that means is that we can have a large enough range, 200 or 300 pip range to trade in. Handles, whatever you want to call them, 20, 30 handles, but most importantly, recognizing that we are now in a range-bound market heading into non-farm payrolls Friday. So when we go down to our smaller time frame as we head into a session, I've marked out Monday's opening range. That's the high and low of the current week as we've started our new month. And yesterday, New York Open, after major red news, respected that 50% level of our opening range and exploded back up through the high of the day without taking out Monday's high of day level. It's an inside day. And then that market proceeded to break down. Now we're inside, but we have our high and low of the week as well as a 50% level that was respected strongly yesterday, exploded out of that range. And you'll notice that the market reacted around that level in the U.S. window, potentially putting in a low in the U.S. session as it traded higher. So we have an area that the market seems to be respecting. So when we head into Wednesday, into New York Open, we had 8:30 major red news, 8:15 major red news. How does price behave when it gets there? Now, prior to the open, we already had the market break down after major red news, non-farm ADP, and put in a peak formation low. Now, the thesis can be that this low may hold and we can go to a smaller time frame. The reason we can go to a smaller time frame is because we are at a significant level. Now, let's just blow this up. If you have multiple time frames on your screen, you'll notice that as we trade down, we've got a peak formation potentially in place, and we have one lower close, two lower closes, and a third lower close 5 minutes, which gives us the opportunity to position ourselves on the break of this candle. Thesis being that the low is already in place. For traders who are using the smaller time frame, talking about the 1 minute, because we have a level, it's about the time of day. You'll hear me repeat this. If I'm using a 1 minute chart, it's because of the time of day. What is the significant time of day here? It's the 9:30 New York Open. We now have what can be potentially called a W at the low of day, a little double bottom, which means that if it clears this level, we have an area to go to break even at. Now, we've just looked at why this opportunity can present right at the open. We're at a significant level. We've already potentially got a low in place, and all I'm looking for is that market to open and enter into the market. Place a stop. You can see now as well, we have 3 pins down into that peak formation low. We have a minimum take profit area just above this wick, but also if we just back this chart up, smaller time frame, we have another level where the market's made a peak formation. Now, some traders opted to hold on to this for the opportunity that may potentially return back to the high, which we can see that's worked its way up there now. But initially, we're looking at a nail and bail, either being at break even or locking in the money, an explosive reversal off of that 50% level. And I'll repeat, going to the smaller time frame when it's the time of day, whether that's third hour, whether that's 9:30 New York open, whatever that is, but it's about the time of day. We're about to open. We already have our thesis in place. We want to be able to position ourselves in a market now that is potentially on a short squeeze explosive reversal. The biggest thing to understand is being prepared, having a thesis, and then how does price behave when we get there. There are 2 types of templates. As I just repeated, the market's dumping down into a significant level that it's respected 3 times now. 3 times. Heading into Wednesday, it's already established 2 bounces off of that level. How does price behave as we head into our 9:30 New York open? A great trade, very similar also on the NASDAQ. If we just step back, the market continued to go higher on Tuesday. Day 2 typically expands the range. It went higher again on Wednesday into the open. So now we have a range expansion before breaking back down. And that range expansion is our 100% box. As the market dumps down, we're at 50% of Monday, Tuesday, Wednesday opening range initial balance, and a little false break heading into Wednesday before trading back down to that 50% level. If that is our high, the market has traded back into it off of that 50% level, an explosive reversal on the NASDAQ and the DJ30. Great job, traders. We'll go in depth into a couple of the other opportunities that presented for ACB traders. And again, keeping things simple. Dump and pump, pump and dump, entry, stop loss, take profits. Great job, traders. Have a great day. We'll see you in the next video, and may the markets go with you.